This is Home to All, an all-inclusive real estate podcast with your host, Nicholas Acosta. Nick sits down with guests to talk about real estate and how it works. Reach him at downtown.expert on Facebook and Instagram, or his website, www.downtown.expert, or call or text him at 407-508-8809. Enjoy the episode.
Good afternoon, everyone. This is Nicholas Acosta, your host of the podcast Home to All, an all-inclusive real estate podcast. This podcast is brought to you by Blanchard Insurance, one of our paid advertisers. First, wanted to start with a brief announcement. Just wanted to give you guys the update, and I will be adding here into the podcast in just a second. But just wanted to let everybody know that Lee and I have decided, one is a business decision, and two is I was born and raised in St. Petersburg, Florida. So Lee and I will be listing the condo. We will be buying the house in South St. Petersburg, Florida, near the Boyd Hill Nature Preserve, as well as near the Gulf of Mexico. But yeah, that's our decision. I've got an amazing team over here. I've got Melissa Tevels, if you're listening. Thank you very much for joining my team, and that you're going to be a vital part of my organization, or as my brokerage, to keep getting listings like you do already, and buyers out there and investors. So I'm really, really grateful to you that you're here on the ground. I trust you 100%. I also trust you with my leads that I've reassigned to you. And, but yeah, this is a personal decision, but I'm going to also plan on growing the brand in St. Pete, where I'm from. I left for a little while, almost a year and a half, and now I will be going back to St. Pete. But anyways, just want to give you guys an announcement, and I'm going to bring Mike into the show here and with Blanchard Insurance, where we're going to go ahead and get started. Hey there, Mike. How's it going?
Hey, Nick. Good. How are you? Long time no see.
I know, right?
It's been a little while.
And we have a new time slot too, because I had mentioned to you that like I was looking at the data for you guys, and this was one of the best times for us to do the show. So I'm glad you guys were able to accommodate it as well. So
cool. Yeah. Thanks for having us back.
Oh, no worries. So, Mike, so let's get started here today. I just wanted to find out what your thoughts are. Like, I know you had sent me over some ideas here, and I really like this topic for us today. So maybe we could talk a combination of both. Basically, the migration to Florida. As we know, Florida is the state with the theme parks and the beaches. Like we were talking about the beaches before we got on the show. But also, how is the COVID-19 pandemic influencing or impacting, I should say, the migration to Florida like we have here?
It's a great question. What I kind of had this idea a little while ago, because, to see where our business is coming from. And of course, as we all know here, like we're really big into the homeowners insurance market here in Florida. And we do really well. I mean, we write a lot of homes, and we started seeing, and I started thinking like, where are a lot of these people coming from? And so we started to do some migration studies, pulling previous addresses and, basically talking to our clients and, new prospects who are coming in the door. And we started developing these migration patterns. And it was really interesting to see where a lot of them are coming from. Obviously the Northeast, New England, because of weather, because of the, those were the states, when COVID first broke out that were in severe isolation. So we're still seeing those, and there's a lot. And it's also the baby boomer generation. I mean, they are thinking, it's an early retirement. Maybe they are, 60 years old and 5 years away from retirement, and they're choosing to retire early. Or, maybe they did get laid off from their jobs. So we're seeing those migration patterns from upstate New York all the way down to New York and throughout New England. So that's a huge influx of where we're seeing people come from. And then we're also surprisingly, out in the Midwest, in areas like Chicago, Illinois. This is a big hub for us, where we're seeing a lot of clients retiring early or just moving to Florida in general. And it's all over the state of where they're moving to. I mean, they're moving to Central Florida. Recently, I started seeing a lot of people actually moving up closer to St. Augustine, like World Golf Village, and a lot of Flagler County, and up in St. Johns County. So we're seeing a lot of that as well. And we're also seeing some people start migrating here from Texas, of all places. So we're doing these migration patterns. And really what we've done on our side is, we've reached out to some brokers in those areas in the insurance realm, and we've kind of set up these kind of distribution points for us. So, for example, we have a partner who's up in the Chicago area, our broker. We developed an alliance from him, and what they're doing is he's going out and finding all these other agents up in that area who are basically referring their clients who are moving to Florida through his brokerage, which is in turn coming down to us here in Florida. Because down here in Florida, as you know, with the homeowners market and the insurance market, unless you are on the grounds, with your troops here, it can be a nightmare. And so we've really developed like these partnerships from these migration patterns to help their clients when they're coming into Florida. So we're trying to, be able to help some of those, whatever it is, 1,000 people moving to Florida per day. So.
Yeah. When you sent me that data and I was reading it, I was like, well, I mean, I've had my research, obviously, as a real estate broker, I look into that stuff too. But when you told me that 1,000, that's a lot of people. And yeah, I agree. I know people in the Midwest. We know people personally in the Midwest that are basically, you mentioned earlier about weather, that they've been there their whole lives and they're just tired of it. They want to look at like about 90 degrees out here today. Yeah. And we're in the middle of February 12th today to be exact. Usually it's Florida. So, we get our little bouts of cool weather, but it doesn't last very long. And it's actually, but it's dry too. It's, it's dry and decent now. I mean, it doesn't feel that hot out like it would in the summer. But it's definitely better weather than like in the Midwest or the Northeast.
It's not 20 inches of snow and it's not, 20 degrees outside. I just talked to a couple of people in Manhattan yesterday, partners we work with, and they were like, I was like, how much snow have you had up there? And they were like, I think they said over the last few days, 20 inches almost. And they are just hating life because you get that. It's COVID on top of that. It's you're already isolated, but then you're really isolated when you have weather like that. It's not like you can go out, and I guess you can go out, and take a walk, but you can't get out and, you're not going to go jogging in 20 inches of snow, and you're not going to get out there riding a bike or anything like that. So.
No, it wouldn't be enjoyable for too long in that kind of weather. But yeah. So this question. So I was thinking of something to ask you while we were talking about this in regards to this topic. Now, I know you said that obviously we know that probably a lot of people, obviously, when you said they were retiring at the age of 60, but maybe they also have, because of the pandemic and the way, corporations run things a little bit differently now because of the whole situation and the distancing thing. Maybe I wonder if there's have you heard anything, maybe those people that instead of necessarily that are moving to Florida are not necessarily moving to retire, but because of work situations that have changed and maybe they can work from Florida now, even though there are companies based, let's just say in Chicago or New York City or something like that. Have you heard any clients of yours like that? Or
Yes, that actually brings up a good point. We've seen some trends where especially like we were talking before in New England, where especially some government agencies are offering people early retirement. With their pensions and whatnot, saying, well, we'd like you to retire at age 55 or, before 65. So they're offering them early buyouts and they're taking them to move to Florida. But yes, you're also seeing where the remote employees, most of the companies that are large office type structures or hubs. So you're talking like call centers, you're talking sales, finance, you're talking tech, you're talking anything that's really an office. You're seeing a lot of those companies get rid of their infrastructure because they basically said, well, we can operate without having these huge central hub infrastructures, that we're paying, millions upon millions of dollars in real estate. And they're just ditching them. And that's why you're seeing a lot of office space out there. And it's not, the smaller offices that are, office space 1,000 square feet. I'm talking about 20, 30, 40, 50,000 square feet of just abandoned office space. Because these companies realize we don't need to support that infrastructure. And if we come back, what is the liability of having all these people come back? Are we opening ourselves to an HR nightmare, or is it going to be COVID, or do we have to come in and invest millions again to readjust our infrastructure? So even in the insurance industry, I think State Farm closed 2 major hubs. Nationwide got rid of all their offices. All states making the same move, and then companies I think like Geico and Progressive are going, to the largest, going completely remote. And I don't think they're probably coming back anytime soon because they realize, yes, it's going to be interesting to see the long-term studies on that, if it's going to create more problems or unknown problems. And I think it already is to a degree with remote employees. We're seeing anxiety levels go through the roof. We're seeing, yes, there is a loss in collaboration. And it's going to be interesting to see what happens. So yes, we're seeing a lot of that too. They're asking me about, have I thought about, can I go up to the Midwest where everybody's leaving, go up there and buy 5 or 6 acres in a farmhouse, for $150K? Hey, it sounds, kind of a little bit appealing to me as well. So.
Oh, I can imagine. Yeah, that's like you said. That's interesting that you say that, because I was just thinking about the other day, regards to, like, for instance, like in the Carolinas, you can, a lot of people own property there, like cabins or things like that, because the real estate is significantly cheaper than Florida. So as these people move out of those states, and then like property values, or Manhattan's probably going to still always be very expensive, obviously, because it's New York. Yeah. But this is a good opportunity for people. I mean, I'm just a disclaimer to everybody out there. I'm not licensed in New York. I plan on doing that one day for the state of New York to get licensed up there. But at the same time, though, it's like, as these prices or the bubble kind of bursts, I was talking to this one of my colleagues, associates on my team, that we do, and you can chime in on this too, Michael, what you've heard, because you're in the insurance. So basically, there is big talk right now that the bubble, so to speak, is about to burst. And it hasn't happened yet, but it has to, because prices continue to climb. And we know in reality that prices cannot continue to climb, because nobody would be able to afford to buy a home if that were to continue to climb on a fast rate, It's
interesting. I don't think the bubble is going to be anything like it was in 2008. And I don't think the fallout and the impact of it is going to be that severe. On the lending side, yes, there's more underwriting involved nowadays. There's more, with DTI and everything else. I mean, it's not like it was in 2008 where, everybody was a lender out there. There's so many lending houses, and let's just call it, Acme Capital Lending, blah, blah, blah. And what they were doing is putting people in the houses with those balloon notes and saying, well, okay, you're a fireman and you're on a $50,000 a year salary. We're going to put you in a 4,000 square foot house, but then we're going to have these other 2 rental properties with balloon notes on those as well. But you'll be able to flip those in a year and sell them. So, you're taking somebody that was making, the household income of maybe like $100,000, probably $50,000, and you're telling them to go out and buy 3 homes. So like $1 million worth of real estate, but you'll be able to sell it. Don't worry. I don't think you're going to see that impact this go around, because the underwriting on lending has gotten really good and the restrictions on it. But yes, do we still sometimes see in the market, and I'm sure you've seen this as well, loans going through where possibly it's, if the AC breaks down after they get into the house, or will they wind up in trouble? Possibly, let's just say they are financed and mortgaged to the hilt. And if something happens to that property, like let's say, burns down to the ground, well, they got insurance for that. But I mean, I'm talking about something like, can they spend $20,000 on a new roof? What if something else happens? So you could see a little bit of that. And I know it's going to be interesting to see what happens with these forbearances on the lending side that people took advantage of during COVID, lost jobs and whatnot, because those are, I think, they got to be coming soon. I mean, I think some banks were still offering forbearance up until like November, December last year. I think they kind of died off in December, but it's going to be interesting 6 months down the road how the banks are going to react. And I mean, if they're going to start pushing people towards the foreclosure process again.
Well, just a quick data to share with you guys and research, and then to share with you too, Mike. I was in this bank owned or REO for real estate agents out there listening, type listings, like a training class to, take on bank owned listings.
Yeah.
And the gentleman doing the training yesterday said that the numbers are going to be coming out soon, that about 250% increase in foreclosures on VA loans from 2020. And those were particular loans that were not included in, they didn't apply for forbearance.
Yeah.
And actually, and the crazy thing is, they said in the training yesterday that in retrospect to the number of Americans there are with loans, that the amount of people that applied for forbearance was actually a very low percentage. And then they're just waiting to see what's happening. So right now they think, obviously, like we're talking about, we don't see it happening like 2008 because of the regulations.
Yeah.
But there is going to obviously be some kind of impact that we're going to feel from it. It's just inevitable. It's, it's part of the economy, and people's confidence is still, not there. I know, our government, U.S. government, the president has announced something about purchasing 200 million doses of COVID vaccines for Americans. Obviously, we got a lot of Americans and people that don't want to take them because of different reasons, which I respect that, because they're afraid of it or if they have religious beliefs. Either way, it's fine. It's understandable. It's scary because it's a brand new vaccine as well. So, what are the risks of me taking this vaccine, or what are the chances of saving my life? So there's a lot of consumer confidence that is, is still kind of weak. But in terms of real estate in general, though, not talking about the forbearance thing, I mean, and I'm sure you guys see, it's still happening here in Orlando. I've showed a client a listing that she was interested in. And I told her, this is the right price. This is the perfect house. And I said, if we don't act on this now or put in an offer, we're going to lose the listing. We're going to lose this opportunity. And they said, okay, well, let me think about it. And when I got back to them later, so can we go see the property? Unfortunately, they had 3 offers. They already accepted 1. And these were a lot of sight unseen, especially with COVID now. We can get away with this a little bit more, or people are more accepting of this than they were in the past. A lot of these properties, especially with limited inventory, they're just putting those offers in unseen and utilizing the inspection period to determine if they're going to move forward or not in these situations.
Yeah, it's interesting. And touch on that. Yes, the forbearances will start coming due, and there's going to be a little bit of a downturn in the market. Is Florida going to be affected by it? And is a state like Texas and a market like Arizona? I don't really think Florida is going to be affected much. I don't think Texas is going to be affected much, and I don't think Arizona is going to be affected much. I mean, people are leaving California and flocking to Arizona. There's still going to be so many buyers coming into the market, so there's going to be an equal number of sellers, and construction is going to continue to boom there. Same thing in like area markets like Dallas, Texas. People are flocking there. People are flocking to Florida. So I think in Florida, real estate is going to remain very stable. You're still going to have, these retirees coming in, people, like we said, people moving because of remote work to Florida. I think you're going to see vertical living continue, and I think you're going to see the construction continue. Now, is it out there? Are the prices high? Yeah, I mean, I go to quite often to a lot of open houses just out of curiosity, and I can tell you the one thing I'm seeing is, and I kind of saw this back in kind of after coming out of 2008, where there was a bunch of investors who, after the crash, had gone in and bought these properties and rehabbing them. And I think everybody has, I mean, especially if you're like a buyer's agent or you're a home buyer right now, one thing that's interesting is to take a look at what you're buying. So, and I went to recently one, and I mean, the price was insane. I mean, for like a 2,000 square foot house in 1970s in Seminole County, and I mean, they were asking about almost like $400,000 for it. So I went in and I was like, well, what justifies this? Yes, the house had been redone. And yes, there was some crown molding put up. Obviously, the person, who was doing this watched a little too much HGTV. It looked like, Chip and Diane or whatever on HGTV had come in, but it wasn't. And I was like, well, who did the work on this? And they were like, oh, the homeowner. And I was like, wow, they did a good job, but is it really worth, they put in $20,000 probably improvements realistically. I mean, they didn't even put a new roof on the house. I mean, that thing was over 20 years old. And I'm sitting there going like, so they put in $20,000 of the, upgrades into this house on their own labor, working at Home Depot over the last 5 years. But you're saying the justification is on that is about a $200,000 return. I was like, that's crazy. And even when I was looking for my last house, I turned down a lot of deals because of the same thing. They had rehabbed it, and it was kind of shoddy rehabs to a lot of degree. But I couldn't wrap my head around that I was going to be paying $15,000 or $150,000 for $15,000 in home improvements. And I think you're seeing a lot of that right now of these houses that people came in and rehabbed and are flipping.
Oh no, I completely agree. I get things all the time. I see these or like investment properties that are for sale, and they're asking for, let's say, for somebody. Well, they have it listed for, let's say, $315,000, and then the ARV after rehab and all that is going to be like $400,000. But I remember the days where you could get properties for, well, those days are pretty much over. Anywhere between, like, let's say $80,000 to $150,000.
Yeah.
But I think those days are, because of our limitations on what's available now.
Yeah.
You're going to see these acquisition companies are going to want to sell these properties for over $300,000, and your return on investment is going to be a lot tighter when it comes on your cap rate and all that stuff, for sure.
And then you're seeing even on new construction. I mean, it's really interesting because like they're putting up construction so fast in a lot of areas, where even down where my mother lives, and I think her house in Port St. Lucie, and I think her house was built in 2018, and already the board is suing for construction defects against the builder. And it's just due to the fact that they were putting them up so fast. So it's like, it makes you think, like, yes, do I go out and buy new construction, or do, I buy a house like you're buying in St. Pete? And it's kind of like, am I going to have more issues, or can I fix the issues on a house built maybe in the 1970s and have a good home and put some money into it and it's going to last another 50 to 100 years? Or do I take my chances with new construction that everything's brand new? I don't have to put any updates in, but am I going to have, issues with the construction and HOA lawsuits and all that? Because that's what I have on my home right now. 2010 construction, our whole neighborhood was like that. You run into that issue. So it's really interesting.
No, I completely agree. And so I wanted to ask you about this on one of the topics that you had mentioned here earlier and before the show, Mike. And I've got it right here in front of me. The Influencer 2.0. What is that? Explain to us and the listeners today what that is.
Influencer 2.0 is something I recently just started using the phrase and coining. And I know on social media, especially whether it's in real estate, whether it's insurance or any business, you've been seeing this obviously over the last few years, but everybody out there wants to be an influencer. And, it's not only to help their brand, but it's to help, get customers and, drive business to their, business. And it's huge in real estate, huge in insurance as well. And you're seeing that. But the thing with, and I call that Influencer 1.0. And you're seeing that develop an immediate return. And, so for example, if, Mike goes out there and influencer on social media, can I get clients? Can I get people to follow me and generate, some type of clientele relationship and develop some revenue and a business model based on that? Yes. But I think you can only do that to a certain capacity, because there's always going to be Mike 2.0 who comes over here, and there's going to be a Mike 3.0, and there's going to be a lot of competition involved in that. So kind of like your saturation rate and the amount of impact you can have on certain demographics is going to be limited. So there are people out, and don't get me wrong, I mean, there is brilliant influences out there. I can name here in Central Florida, like Ted Bogert on the TED Show, like great influencer. Ken Pozek, a realtor we work with, a great influencer on social media. But what I think you're going to see down the road is these, what I call Influencer 2.0, who are looking at it from a long range scale. And they're looking at how can I influence people, but mass the masses. So I'm not talking, I want to influence 1,000 local clients, but I want to influence 1 million people in the United States of America. And how do you do that? And I think it's, you're going to be seeing it, whether it's the use of language, long-term branding, slow influences to large groups. And I think it's going to be very subtle. I hate to use the word propaganda, but I think it is going to be a form of positive propaganda that they are influencing. So for example, like Nick, I could influence, if I'm a car dealer. How do I influence you not to buy a car today, but how do I influence you to buy a car in 5 years? But I want you to go out and influence another 100 people. I want 100 Nicks in 5 years to buy my cars instead of Nick, but I want you to buy a car tomorrow. So I think a lot of influencers out there, it's kind of a new trend that we're seeing in sales world, I guess, that is going to come around. And on the other topic we're going to talk about, which is social data, and that's what they're utilizing. So if I can basically take Nick's social data, use it to my advantage, how can I influence Nick and 1,000 other Nicks? And my return may not come for 5 years, but I'm basically growing this platform. So I think that's what I would describe as Influencer 2.0. And I think that's really interesting to see a lot of people starting to do that right now.
No, that's a good point that you brought up about this influencer thing, because I like that. As a broker with my brand and my business, I have been, in the past, I had been using television, like traditional television over the box type TV, advertising and stuff. Obviously, you get the brand out there, but I have switched more over to, we're working with a marketing team now that I've hired that's working on influencing on like things like YouTube platform, as well as Facebook, Instagram, and even of course LinkedIn, which is more towards business professionals. But that's where, and then I'm creating. We just went through a photo shoot where it was like showing me in action, and they're teaching me how to put captions, what kind of hashtags you use to help grow the influencer, and they'll be able to see that data like you're talking about with a report. So like for example, like you as an insurance carrier or insurance company or whatever it might be, a clothing company or whatever it might be, like you're saying, Nick is, this is his data. This is the demographic or the age group he's attracting. I'm going to go, push my like clothing line on this group of people or whatever it might be. So that basically collecting data like you're talking about in terms of Influencer 2.0, and it's just amazing. That's the way it is today. Like, like I've done the research too, that putting ads in front of people on YouTube now, because what do we do nowadays? We just pick up our phone. The days we can go on demand, we can search for whatever you want to see, a cat video or a dog barking. We do the dog barking ones all the time at home because I like sometimes to like. Not really. I love my dogs, but I like to tease them, making those dog barking noises, and they're like, "Who the hell? Where is that dog coming from?" So we do all the goofy stuff with YouTube. But when some people go to do that goofy stuff or whatever it may be on YouTube, they'll see it'll place an ad in front of them to influence them on the brand. So
and I don't think it's going to be an accidental. I call it like an accidental fad, like right now, and you're seeing influencers take advantage of that. You see it on YouTube all the time. It's an accident. It happens, and it creates an epidemic, and it just, it influences like millions and millions. But I think in 2.0, what you're going to see is, how do I stage that to happen? And not now, not tomorrow, but in 5 years, where I've already built you as an audience that you subconsciously, subliminally, do you know this is going to happen? Am I going to have a laughing cat on or a singing dog on YouTube 5 years down the road? Yes, but I've already built this infrastructure behind that and this advertising and marketing campaign for 5 years that I'm going to make the cat do this. I'm going to make the dog sing automatically in 5 years.
Right.
So I think they're really, a lot of advertising and marketing companies are really getting into that, and they can be more strategic about it. And I think the rate of return is going to be phenomenal. And it's interesting to see that start happening now.
No, that's awesome. All right, so we're at the last minute here. So just to share with, since it's Friday, and we'll be back here. Mike will be on the show again with me on the 19th of February, next Friday. So just like word of advice for the weekend and the week ahead before we come back on next Friday.
If I could sum up what I have learned this week is to tell people, and I was recently telling a close friend of mine about this, who's also a business owner, and was very stressed out, very anxious about, they recently did some growth in their business. And I said, the best, and this happens to me all the time. And I said, the best advice I can give you is to take a step out, take a step back, take yourself out of your business, even if for just a few hours, and enjoy your business and reflect and look back of where you have come and what you have done. Do not, even if it's for an hour, reflect on that. Go to your business, just hang out, enjoy yourself. And this was like in the service industry. And I'm like, when you go there, don't work in it for a day. Just sit there and enjoy it and just look around and look at what you've built and where you've come from. And you have to, unless you're in a business that you can enjoy it. Sometimes I know things get stressful, then you probably shouldn't be in that business. It will kill you. And I see this anxiety, not only in just business owners, but in general, that people have. People this last month, I mean, their anxiety levels from COVID are through the roof. And it's going to be interesting to see the long-term effects of that. But again, you just have to look at them and say, maybe you don't own a business, but take a step back and out of your life for an hour, enjoy it, relax, and see the bigger picture of what it is. And once you see the bigger picture and you step outside of that storm, I think your anxiety levels go down, your stress levels go down, and you can put things in perspective. Because when you're in it and you're stressed out and you're anxious, I mean, experiencing this myself, your judgment, your perspective is very warped and it is unrealistic at that point in time.
That's the perfect thing to end the show with. I'm really grateful for that what you just shared with us, Mike, because that's another reason that we've decided to move back to Pinellas. Don't get me wrong here, everybody listening. Orlando, my presence is gonna be here like I've never left, because I'm going to make sure that my business is running the way it's supposed to be here, and that my influence continues to grow all across the state of Florida, all across the world. But I will tell you right now that my happy place, when you say step outside your business and reflect on what's happened since you've started, that going to the Gulf of Mexico or to Tampa Bay and sitting there by the waterfront, or going to the St. Pete Pier, which I have not been able to experience a new pier since I left, because it was under construction for years. Yeah. When I had left, it was still under construction before it was still completed. But those are my places of relaxation and peace. So that's what I'm going to do, and I'm going to take your advice to heart there, Mike, when I get back to St. Pete. I'm going to do that, and of course, now, too, we're going to go take a walk. We're going to pick up our dry cleaning off Orange Avenue, but we're going to go pick it up by walking. But the thing is, that I'm saying is that, that will be my happy place, my safe place to reflect on everything. And anybody out there listening, definitely take Mike's advice to heart and go with it, because you don't want to end up getting yourself ill or incapacitated because of too much stress in your life. It could lead to, serious health problems. And I'm really, really grateful for that, Mike. So thank you for that.
Yeah,
advice.
Absolutely.
All right. Awesome, guys. Well, this has been the Home to All podcast with Nick Acosta, coming to you live from downtown Orlando, Florida. I will be here next week in Orlando, Florida, still with Mike and Blanchard Insurance. Thank you, Mike, again for having you joining me on the show today. Absolutely. And see you next week. And we'll chat next week sometime about what we were talking about before the show. But everyone, have a great weekend. Stay safe out there. It's a beautiful day. It's sunny outside. We're gonna go take our daily walk to like Mike suggested here, to decompress and think about, reflect on stuff. And you guys have a great weekend ahead. All right. Thank you, Mike, again.
Yeah, absolutely.
All right, guys. Have a good day. Take care.
This has been Home to All, an all-inclusive real estate podcast. Find Nick on Facebook and Instagram at downtown.expert, and also his website, www.downtown.expert, or call or text him at 407-508-8809. Thanks for listening.
Instead of spending hours or even days looking for your new home, let a downtown Central Florida expert guide you. Hi, I'm Nicholas Acosta, and I'm here to welcome you home. Being a Florida native, I know how exciting, convenient, and stylish the downtown Florida lifestyle is. Whether you're entertaining your guests or enjoying the views, Central Florida downtown has a lot to offer you and your family. Buying, selling, or investing, I'm your downtown Central Florida expert.